So today I want to go ahead and show you how I made almost 6 figures trading options. Now, something I want to make very clear in today's video. There is a lot of risk involved to make this type of money, right? So everyone out there that's going to comment that I took a lot of risk, yes, guys, to make this amount of money, you need to put on risk, right? We as traders understand our risks. We set up theses. We understand how much we can risk to make this amount. There is no doubt that to make this money, you have to put money on the table. Now, not everyone is at this point in their trading, and that should be something you understand. You need to know if you are at this point or not. But I use this as a video to show you the type of risk that's going to have to be taken and understood to make this money correctly, right? Not make this money off some type of hope and dream, but make this money in a correct thesis and a correct trade. What is it going to take to make 6 figures? It's going to take some size. It's going to take some risk. It's going to take some understanding of your game plan. But I hope that in this video, you see how I did it today. And you'll also go ahead and see the live trade of me taking this position. And hopefully that helps you as well. So I hope you guys enjoyed today's video. If you do after watching it, press that like button, subscribe to the channel. Let's go ahead and jump right into it. ARM. This one I want to be more focused on as of late. I want to be more focused on this moving forward. I really think that there's an opportunity here on ARM. I think this is a very interesting weekly chart consolidation, right? You've really been consolidating quite well on this weekly chart. You got back above like this weekly high around 155 to around 150, right? Anywhere between the 150 and 155 area looks like a very, very interesting break, right? Look at this. So here's your weekly, right? Weekly chart on ARM. You have major highs here between 155, 150, turned into lows here, which helped it higher. You ended up failing below it, right, and really breaking down. You got back higher and rejected that level, right here, 150, 155. And today, you are possibly looking at a new low forming above this level. If you get a new low forming above 150, 155, I really think that this is something to pay attention to. And this company was also mentioned in the Project Stargate, right? So there's going to be some interest about whether this, what could happen with ARM here on that event or on that news, right? So you can see right here, look at this zone, 150 to 155. Very clear failures, 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 right? Very clear holds, 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 holds. So if you see ARM above this 150, 155 level, I would really be interested in whether there is a very major opportunity here. So what you just went ahead and watched was an analysis straight from the pre-market live stream, which is where every single morning we come to YouTube and we step in front of 3,000 people and set up ideas for the intraday. We were focused on ARM because of a few reasons. First, we had the Project Stargate that was announced last night, which obviously was going to increase the momentum, increase the volatility, and give ARM a catalyst to potentially move, right? This was a very important thing to pay attention to, that we did have a catalyst behind this name, and we saw the semiconductors look very hot overnight. So I knew stepping into today, I was going to be long semiconductors. There was really no question about that. I accepted that. I knew that I would take that risk, and I accepted that if I would be wrong here, I would have to be a loser, right? I would have to take a loss. But I knew stepping into the market today, waking up and stepping into the arena, I was long semiconductors today without much concern, right? Whether you agree with that or not, the most important part here is you are understanding what you're going to do, right? I don't care if you agree with it or not. What matters is that you had a plan of what you were going to look for and your thesis behind that sector, right? So I stepped into today, I'm long semis. No one's talking me out of that. That is my game plan. So what semi am I looking for? Well, ARM is absolutely something that has a technical setup that I absolutely loved, right? So I can combine my thesis for semiconductor strength with a chart on ARM that is giving me a valid reason to enter the position, right? A match made in heaven, right? And that is why you will see a pretty aggressive entry point and a pretty aggressive entry and sort of management behind this trade, right? It was an aggressive type trade with quality size that would make me large amounts of money if my thesis was correct. And I knew that this was an A-plus thing that I wanted to focus on. I knew that this was one of those trades that you go ahead and put that extra risk on, that little bit extra size that you say, all right, I like this, right? I'm going to go ahead and put some extra size in this. You actually will see in the live trade later today, or later in this video, that I was about to take double the size that I ended up taking. So you're going to see in the live video, I'll make sure you see it. I was about to load 100 contracts of ARM. I ended up loading and taking 50. So I was almost getting even more aggressive, but I did back myself down, which in hindsight, I sort of wish I didn't. But at the time, I listened to my intuition. My intuition at that time in that quick moment said, you know what? Calm it down. Let's be careful with this size. Let's cut it in half and be a little bit more conservative. You like the trade, and it looks like you're getting, ready to go aggressive, but intuition in the back of my mind, which is something I always want you guys to listen to, told me to back it down, and I listened to that. Hindsight, of course, I wish I didn't, but that's okay, right? If things went wrong here, I would have been very happy that I scaled down that position. So on the screen, you can see it's right up on the screen. You've had this countdown going for about 5 minutes now that you've listened to me. That is 23 minutes until the market closes. You guys know this is my real account. I don't think I need to make this apparent anymore. You can see $92,000 in the day, most of it coming from ARM, $92,000. Year to date, $408,000 year to date. In the first 22 days of 2025, we are up $408,000. Beautiful. Now, with that out of the way, let's talk about the ARM technicals. Then we will jump into TradeZella and break down the two positions that I took to make this $92,000. Here on ARM, this is the weekly chart. Number one, we have seen this very clear uptrend from $46 until the recent tap right here of $120 on ARM. Every time we've hit this uptrend, we have seen a very strong reaction to the upside. And this time, we see it right at that $120 mark. Now, that $120 mark, we can see was a very strong previous low on ARM. Very strong lows here, very strong lows here. And the recent tap of that 120 has absolutely created some volatility to the upside on ARM. So I knew that coming into today that we have been moving off of this trend line and moving off of this major 120 demand. Right here, you can see that confluence that really set this thing higher over the last few weeks. Now, it wasn't until the break of 150 to 155 that I was interested in longing ARM. Now, why was I waiting for us to get above this zone right here? The reason for that is because we have seen those holds at 120, but we have also seen those heavy failures at 150, 155. So I didn't want to get exposed long right into that supply level for the potential of that failing, right, and coming back down once again. I needed to see us break and hold above this level, right? And if we do that, then I was looking to target this sort of this sort of push higher, right? And targeting a push up into that, which is exactly where ARM went today, right? And so we can see this morning, if we go ahead and go down into the short-term time frames, we'll go into the 4-hour chart. This morning, we saw ARM opening above that level, right? And so let's go ahead and break this down and go to highlight the after hours. You can see right here, this morning, we opened around $160 per share. This was now above my 149, my 150 to 155 level, right? We are now above that major weekly level that I was waiting for ARM to get above. We can see here on the 5-minute chart, yesterday was really where we started to get above that level. Right here, you started to see ARM willing to stay above that level. You'll see in the trade that I actually swung some of these calls from last night into today and then aggressively added today as the setup looked to be more apparent. All right, so I was longing overnight as you were starting to hold above that 150, 155 zone, got a good overnight move and started to nail this thing near the open and got an absolutely monster rip to the upside. Now, I could not have guessed that ARM was going to do this, right? That is not something that I am knowing coming into the trade, right? That is not something that I will take credit for. I did not know that ARM was going to go vertically higher. What allowed me to take advantage of this vertical upside move was my preparation, my thesis, and my understanding of my game plan to enter this trade with confidence and to allow it to play out, right? Those things you've done before you enter the trade to build confidence is what allows you to take and enter this type of trade. If I woke up today at 9:27, hungover, not sure what to look at, right? Not in my peak performance, ready to go, I would not have caught this trade. Why? Because I did not do any preparation and understanding what could happen here. But if you do that and you understand what could happen and you prepare for it, you are more likely to be confident and take and strike these positions when they occur. So I knew coming into today, right, that we were above my major demand, my 155 to 150 demand. And I knew that coming into today, I was going to look to enter a position long, understanding that my risk would be down below 150. That was going to be my risk. No matter how big it is, that was going to be my risk. However big and wherever my entry was, that's where I was willing to hold on to the trade. I knew that if ARM was going to be above that 150 to 155 level, that is a major previous weekly supply that we are trading above. And no matter what, if it creeps down into it, that could very well potentially be, right, a very nice long entry. So I always knew coming into today that no matter where ARM was, I was going to be long above that 150 to 155 level. Now, once again, why, right? Why was that my idea? Well, we'll go back to my analysis again really quickly. We have those 150 highs here. We have those 150 lows here. We have that 150 to 155 zone right here. So I figured, all right, we see some very clear previous rejections in this 150 to 155 zone. If we're trading above that, then I am long above it. I'm using that as my stop loss and my risk, and I am targeting the next move higher. For me, the next move higher was right here at 170 to 172. That was my target for the upside move. Now, what we can see is that as we look at the market, right, on the intraday today, we moved aggressively right into that level. And even here, as we close the market, ARM looks incredibly strong, still holding above that 170 to 172 level. Now, what made me hold on to this trade here on the intraday today is you can see right here that ARM actually, on the 2-minute candles, turned that 170 level exactly into a low. And that right there is what set ARM off on this sort of moon mission, right? Straight up into that 184 supply today. You can see we had that target of 170, 172. I extended the trade because there was never a sign of a failure here. There was actually a sign of a hold here, which allowed me to hold the trade and extend this win. You can see here, and you will see in the live trade where I was exiting out of that position. Now, let me go ahead and pull up TradeZella for you guys to see the statistics of this trade. So right here, this is number one. This is the first trade we took. This was the bigger trade out of the two. This was the longer dated trade out of the two. Yesterday, I went ahead and I entered some ARM January 22nd. ARM January 31st, 155 calls. So next week, 155 calls was what I was entering. I bought those yesterday on Tuesday. Right here, you can see my first entry. Right here, this was Tuesday at around 2:42 p.m. I bought 7 contracts. And the reason I did this, number one, was to just have a little taste, right? Let me get a taste because I'm starting to see it. And it gives me that, right? It makes me know that I'm going to be watching this tomorrow. So if I have an open position on this, I'm going to keep it small for now, right? I don't want to worry about the overnight, but let me get a taste and it will make me watch it tomorrow, right? Because I have that open position. So it tricks myself into saying, okay, you have to watch this, right? Do not forget about this. Put something on the table. Make sure it's in your portfolio, right? Make sure when you wake up tomorrow that it says ARM calls and you have to watch it. And that sort of tricked me into making sure that this was something I was paying attention to. Now, you can see here, about 40 seconds after open today, I slammed 50 of the calls at $11.40. So these contracts were already up 100% from the overnight session. and I went ahead and I took another 50 contracts at 1140, which was, again, another, let's say, $50,000. So this is when all the critics start coming in, right? Oh, right. How could you just take that 40 seconds after open? And I understand, okay? I understand. The reason I understand that is because I recommend to people myself not to do this. Here's the difference, and I want to make sure you listen to this. This is the difference. The difference is that 99% of people that open their positions early after the open have no plan. They have no idea where they're going to stop out. They have no idea what the technicals are. They have no idea why they're even doing what they're doing. In this situation, I knew that I needed to get into this position. I did not want to worry about anything on the intraday. I knew that we were aligning over my 150 to 155 demand, which was down here, right? I knew we were going to open above that 150 to 155 demand, and I knew that my entry was with a risk under 150, and that's it, right? I knew that coming in, and I was not going to just sit around and wait. That was something I was going to target right away. Now, something that probably went ahead and influenced that decision was how strong ARM was off the open, right? Right away off the open, we saw ARM just rocket to the upside, and I knew if I waited, right, and if I waited and did not take my entry, this risk-reward would grow, right? Every minute I waited, the risk-reward grows. Every minute I wait and I get scared to take this position, the risk-reward grows, right? It gets larger and larger and larger and larger if ARM continues to the upside. So in my mind, instead of just, right, seeing some kind of magical reason to get in, I think, hey, I got to get in this because the later I wait, if this thing keeps increasing as it is right now, my risk gets larger, right? So I want to be in as close to that demand low as possible so my risk is quality, at least to me, right? And so I just went ahead and I just got right into it because I wanted to make sure that I was close to my risk, which was down here in the 150 to 155 area. Whether that is a style that you want to approach trading with or not, that's up to you, right? And I understand that it could be overly aggressive for some, but if you're confident in your strategy, in your plan, and your size, I don't think you need to be scared of taking that aggressive position, right? As long as you understand what's going on. And so we took that trade. Those contracts went up to 21, went up to 24 and 24, where we were selling out of that position for just about a 108% profit. You can see my sales on this were pretty much right at the highs around that 184 supply. So we took it from that 165 to around that 185, about 20 points to the upside, risking about 10, right? So about a 2-to-1. And probably would have risked about, let's say, $30,000 on this trade if I was wrong, making about $66,000 on the trade, about 100% gain. Now, there's another trade that I want to go ahead and talk about next, and that is this trade right here. This is a $25,000 trade on ARM. This was a trade that I took after the move higher, right? You can see right here, I was entering an ARM on pullbacks today, right? Entering right here around 6 and around 7, selling into 9s, into 10s, right? Basically 10s, making about 37%, about $25,000. Why did I take that trade? Well, we saw just an absolute brute morning on the NASDAQ futures. So if we go to the NASDAQ futures, I was basically following that strength. So here on the NASDAQ futures, let me go ahead and go to today. Right around this area, we were seeing that very quality hold of around 22,000 on the NASDAQ futures, right? Right here, 22,000, 22,000. That was right around the 10 o'clock time frame, and we were seeing some very strong strength across semiconductors at that same point. So I saw that strength on the NASDAQ. I saw that strength on the overall market. And on the S&P 500, the other thing that I was noticing was this. It was the 6120 on the S&P 500 futures. This was a major level that I wanted to see the market hold above. And so what I looked for here was an ARM re-entry aligning it with the ES 6120. I figured that if the ES could hold above that 6120, turn that into a new low, that we could get another push to the upside on the market, which would then influence the strongest stock on the market as of the morning to push higher once again, right? And so I was looking for where can I re-enter ARM, aligning it with the NASDAQ and S&P demand to find that new entry long. And it looked like ARM was starting to hold around this 176.50 level. And you can see right here, we held that level. I was entering on these pullbacks, and we got that next squeeze up into that major supply high. The other thing that was also holding, or at least I was watching to stay in this trade, was the VWAP. So I was very focused on where that VWAP was, and you can see that we were just sort of trending above VWAP all morning, which allowed me to take those entry longs on the pullbacks, and that is where we went ahead and squeaked out another $25,000 right there. You can see my enters, and my exits up at those highs, taking that profit and running with the $92,000 on ARM. So before I run the live trade on ARM, both the first and the second trade, I want to make something clear about this video. What I want to get across in this video is the fact that if you can build a thesis, build a trade plan, understand what you're getting yourself into, you can trade with confidence and execute correctly. Whether that trade turns out to be a win or a loss, that is besides the point. I am not here to prove to you that I can make money trading. I think I have done that over and over again, being up $400,000 to start this year. That is not the purpose of this video. I want to get across in this video that I went from a pre-market to a market open with a plan, and I was planning to execute that, and I never wavered from that confidence, and I went for it, right? And just that alone, just that confidence alone will help you improve your trading. Whether that is going to result in wins or losses, I'm telling you, just the fact of walking into the day with a plan and with your confidence, and you're not slumped over here on the desk, waiting to lose again, being unsure what to do, right? Just building that plan and figuring out what you're going to look to trade will help you improve your performance. Of course, you need to build that strategy so that you do know what to look for. And I hope that my videos and maybe some other info that I provide can help you build those plans in the future. So I hope that you enjoyed today's video. If you did, press that like button, subscribe to the channel for me, and of course, stay tuned as I'm about to run the live recording for you guys to watch on ARM. With that said, have a fantastic rest of your night. Peace out. Watch ARM here, guys. Already strong to start the day. All right, guys, I'm going to just grab some February NVIDIA calls, man. I'm grabbing some February NVIDIA calls. I'm stopping out under 143, and I'm see you later. All right, that's it. ARM is starting to get a little bit crazy right now. Let's see if it can get over this 172 spot. Okay. ARM is the strongest right now. This might be the biggest mover of the day. Let's see if we can get a solid hold over this 170, 172 zone. ARM, beautiful hold of 170, man. Oh, baby. If ARM can defend that 170 today, yeah, 170 defends should bring this to around 180. Read up a little bit. All right, guys, I'm taking that ARM trade. I took some Friday 175 calls. Stop loss under 170. I'm going to see if I can get the second leg here. Worth the risk to me. Worth the risk to me. Stop loss under 170. Just going to let that sit. Come on, ARM. Send it. Send it. Absolutely send it. Ah, NASDAQ, yeah, QQQ532 is the fake out. Oh. Oh. Amazon. Fuck yeah. ARM new highs. Everything is a good long entry right now if the ES holds 60, 120. All right, guys, I'm taking some profits on this ARM short term, man. Up 50% already. I got to take some off. Up another 40,000 on this. Jesus, man. This is a big trade for me. Should I just hold it, Piff? I mean, I'm going to hold some. No, I should take some off, man. I'm up $115,000 today. So let everyone know that. I just took some off ARM. Took half off there on that ad. On that pullback.